Welcome to Business Notes. I'm your host, Diane Bogino, President of Performance Strategies and Diane Bogino Development. Our guest today is Rocky Lalvani. Rocky was shocked to learn most business owners don't look at their financial reports. Most business owners, of course, are not accountants and don't want to be. But when he realized how much of a problem this was, he knew his purpose was to help business owners be profitable. Rocky is a certified profit first professional. Today, he's going to help you understand your numbers and become even more successful. Rocky, thank you for being on Business Notes and welcome to the show.
Thank you so much for having me, Diane. I'm excited to be with you this morning.
Yeah, so let's start out, Rocky, with you were in pharmaceutical sales. What was the catalyst that brought you to being an entrepreneur?
So why did I leave there, you mean?
Yeah.
I never wanted to be in pharmaceutical sales. That was never my dream. It was never my desire. The way I got into medical sales was I was in office equipment and they were stealing all my sales reps. And I finally said, well, if you can't beat them, join them, right? They're paying well. It's not that difficult a job. And so I got involved. It gave me a lot of money and a lot of freedom. And those are the two things I love. So that worked out well. I always say the enemy of great is good. So it was a good life, but it wasn't a great life because it didn't fulfill what I really wanted to do. And probably about 7, 8 years ago, I started down a journey to say, hey, I've kind of made it financially. What do I really want out of life? What am I going to do post this? Because one day this is going to be over. And what do I want to do next? And I've always been entrepreneurial. So we've always had side businesses. We've had real estate. Even when I was in high school, I would go into New York City. I would buy stuff, mark it up 100% and sell it to all my friends. So it's always been there. I think the biggest thing I always struggled with what kind of business do I want to do that fits me and how do I go about creating that? And so I finally figured it out. And I started it on the side, and I never knew when I was going to go full steam because I had a couple of levers there. One is my kids were still in high school, and so I kind of wanted them to finish high school before I did that. Now they're in college, and then things got like bad at work. And I'm like, if you're going to start driving me up the wall and playing these stupid games, I'm out of here. And so I walked away, said, let's just go full steam now, because if I wait 5 years and do this, I know it's going to be successful and I'm going to regret not starting sooner now that I knew where I was going and what I was doing. And so that's probably the more of the story than you wanted to know.
No, that's look, those corporate games are what drive a lot of people to being an entrepreneur. And as entrepreneurs, as business owners, why do you think we have the wrong equation for profitability?
So I'm going to make fun of accountants, but understand I'm married to one. So I get it, right? Accounting principles are designed for putting together books to report stuff to the government, to the SEC, and to all these places. And so the whole purpose of those is to come to a bottom line. How much profit did you make? So they have a simple equation, which is sales minus expenses equals profit. But let me ask you a question. Where is profit in that equation? The end, right? The whole concept of that is profit is a leftover after you spend, right? You go out and you do your sales, then you spend all the money to run your business. And well, at the end of the year, when it's tax time, the accountant comes to you and says, congratulations, you're profitable. And you go, where is that money? And they go, you spent it. That's funny, right? And so I partnered with Mike in Profit First, and we can go into some of the reasons behind that. But Mike said we need a better equation for entrepreneurs. And the better equation is sales minus profit equals expenses. Now, the equation's still the same. You know, it's mathematically the same. But now we pay ourselves first. Now we take our profit first. Now expenses are something we learn to live within. And so expenses are a leftover, not our profit. And it's just a mindset shift. So that's kind of the new equation for entrepreneurs to think differently and be profitable.
Right. Now, since you mentioned Mike, could you just briefly tell us a little bit about Mike?
So Mike is a serial entrepreneur. His company was actually the one that investigated and did the forensics behind the Enron debacle. And he said, yes, they're guilty, right? He sold that business off and a couple other businesses, walked away with 7 figures, thought he was the smartest businessman in the world, and he blew it all. Literally to the, to rock bottom of, they're coming to take the cars and we've got no money in the bank account. And he said, I thought I knew what I was doing, but clearly I didn't. And I need to examine the way I do things and create systems and processes to prevent me from harming myself. And so that is essentially what he did. And that's who Mike is. And he wrote the book Profit First, which many people
say his last name if you would.
Mike Michalowicz.
Thank you.
I know it's hard.
Yeah, better you than me. So how do most business owners manage their finances?
So most business owners are not accountants, right? They don't look at accounting reports. Not to mention, by the time you get your accounting report, it's behind. And depending on how you do your business, it could be really behind. Who cares what happened last month? I'm looking forward. I'm trying to run a business. I want to know what's going on tomorrow. What they tend to do is they look at their bank account. They go, do I have money in my bank account? If I don't, I know I need to collect or sell. If I do have money in my bank account, spend, because we got to spend. And so that's generally what happens. And that's the way that they do business. And it doesn't always work, because what happens is when you look at your bank account, you forget about all your obligations, like taxes, like payroll, like that thing you bought last month that is due in 10 days and you forgot you bought it and now you have a big bill coming. So even though you're looking at your bank balance and you see money, the reality is you probably spent it already.
That's so true. And of course, cost of products that you might be selling. Yeah, absolutely. So tell us, Rocky, how are you different than a financial advisor?
Well, so I think financial advisors are more about managing your investments. At least that's what I look at them as. And that's not what I do. I don't have any licenses to manage investments or do any of that. I can give you some general advice about it and educate you, but that's not my place. What I do is I serve as Chief Profitability Officer. So the question you have to ask yourself is, who in your business is in charge of profit? Because if nobody is, well, you're not measuring it. You're not getting the results you want. Somebody needs to be in charge of profit. And unfortunately, most accountants are not in charge of profit. They're in charge of taxes, right? The bookkeeper's not in charge of profit. They're in charge of making sure that all the stuff gets put into the books. And most business owners hate looking at this stuff. They love what they do. So you've got to find somebody in your business to say, I want you to be in charge of profit, because without profit and cash flow, we're screwed.
That's for sure. Now, Rocky, your parents brought you to America. I think you were 3, and you said your dad had $25 in his pocket. What did you learn from your dad about money?
So this is, I didn't realize how much of a different childhood that I had than most people. So we came here, we started on the wrong side of the tracks. And over time, they quickly started to have financial success. And they moved up the economic ladder. They would get together with a lot of their friends who would also come over from India around the same time. And they would talk about money and life and these types of things. So money was a normal conversation in our household, right? It wasn't a taboo subject. And so as I got older and I, looked around in my 30s and 40s, I'm like, why are all these people struggling? Why aren't there more millionaires? Why isn't there more success? And I started to understand that most people never learned about money, because I have an MBA. I didn't learn about building wealth in my undergrad with my Bachelor of Science in Economics. They didn't teach me how to build wealth in my MBA. The school doesn't teach us money. And if it's a taboo subject, it's like, whoa. But I learned those principles of of how to save, how to negotiate, and how to build wealth as a kid. And so I saw people doing that and very quickly having financial success. I also saw the other side of financial success. When you have financial success, if you don't teach your kids to value money, they become very spoiled and you've got a whole nother headache that you've got to deal with. So it's a fine line balance both ways.
Yeah, absolutely. I agree with you that education at a young age is important about money. So, what is Parkinson's Law and how do we use that to our advantage as business owners?
So Parkinson's Law basically states that we will use up all of a resource that we are given, right? So if I give you 3 weeks to do a project, you will take 3 weeks. If I give you 3 hours to do a project, you'll get it done in 3 hours. If I give you $100,000 to do a project, you'll spend $100,000. If I give you $1,000 and say, figure it out, most entrepreneurs are extremely resourceful. They will figure out a way to get it done. And so here's the thing, how much resources are you giving yourself in business? And that's what goes back to the bank balance, right? We look at our bank balance, money, let's use it up, right? And that's the problem. Spend, spend, spend.
Yeah, that is a problem, and it's also a problem in relationships where one partner is a saver and one's a spender in marriage and in business. So your program is profit first. So how do we implement profit first?
So what we do is we leverage your bad habits, right? We know you don't want to look at accountant reports. We know you want to look at your bank balance. And so what we do is we set up a system using your bank accounts to allocate your money. So are you familiar with Dave Ramsey and his financial planning?
Yeah, I've heard of him. Yes, absolutely.
All right. So, in his book, and Dave didn't invent this, Dave took it from somebody else. Everyone's building on everyone else's ideas. They talk about using envelopes in personal finance. So you get your paycheck and you separate your money so that it each has a purpose, maybe for the mortgage, for groceries, for utilities, for other bills, and you put it where it belongs. And then when you run out of money in that envelope, well, you stop spending, right? You figure it out. So what Mike did is say, let's do the same thing in business. And so what we do is we open up multiple accounts and we name them. So the first account we're going to open up and name is profit, because you should take profit first. We're going to open up another account. We're going to name it owner's pay, because you, the owner, deserve to get paid, right? Most business owners pay themselves last. Why? You took the risk. You did the hard work. Why aren't you paying yourself first? That's a universal principle. Then we're going to open up an account and call it tax, because it's not your money. It belongs to the state and federal government, right? You have to pay it to them. And so now you've got an account for tax. And then the last account is your operating account. That's your spending account. Now, there's a whole bunch of allocations that go on behind the scenes. There's also target allocations. A lot of that is in the book, depending on the size of your business. But what you basically do in a systematic, rhythmic way, whatever you decide your schedule is, you sit down, you look at your income account. That's where all the money came in. And you say, okay, $100,000 came in. Well, my business has a 10% profit rate. So I'm going to put 10% in my profit account. I take 15%, maybe as the business owner. So I'm going to put 15% into my owner's pay account. I got to pay taxes. So I'm going to put 15% into my tax account. And then the remainder goes into my operating account. Now, when I go look at my bank balance, I'm only looking at my operating account. I've already allocated for taxes. I've allocated for my pay. I've allocated for profit. And now you have less resources. Now Parkinson's Law kicks in and you can spend your account, but you do it appropriately. Now, let's say you talked earlier about paying for your cost of goods. If you've got a high cost of goods, which will absolutely crush you, we might create another account for cost of goods, right? And so let's say our cost of goods are 50%. then when the money comes in, we'll put 50% into the cost of goods account so we can pay back the vendors that we bought from. And then there's even less in your operating expense account. Now you truly know how much you have to spend. And so let me give you a couple of stories and some examples around that. So
Great.
first off, if your business has a 5% profit rate, that means for every dollar you spend, an additional dollar, you need 20 additional dollars in revenue. And I don't think most business owners realize that ratio. They think a dollar in is a dollar spendable. It's not, because you have to pay for your profit, you have to pay those taxes, you have to pay cost of goods. And I want you to shift the way you think about that. I'd like to tell you a story about Mike. So Mike, he's in the recruiting business. He had a wonderful year one year, and so his sales went up through the roof. The problem is the accountant, right, is looking at last year's tax returns, doing quarterlies based on last year's revenue. And so he's underpaying his taxes all year. So tax time comes, right? The accountant calls him up. She goes, "I've been dreading this call." He's like, "Why?" She goes, "You owe a lot in taxes." Accountants hate to make those calls where they have to tell you you owe in taxes. That's why they have you over withhold and give extra to the government, which isn't always the wisest thing because it makes them look good. He said, "How much?" She goes, "It's almost six figures." Right. And so he goes, "Yeah, I knew I had a blowout year. I knew things were good." He goes, "I'll drop off checks tomorrow." She goes, "In over 20 years of doing this, no one has ever said that to me." Right. Because normally, what do? I see your face, you scream, you yell, you freak out. But what Mike said to me, he goes, "I didn't say this to her, but there was more money in my tax account than I needed to pay taxes," because he had been putting aside his percentages every month. And all the business owners that do this, when tax time comes, it's the same story I hear from them. What they tell me is, "We hate paying taxes, but we're confident we can pay them." And so it takes away all the anxiety, it takes away all the stress of that call from the accountant because they know they have the money set aside. And so from that standpoint, it's wonderful. The other thing is that profit account builds up a cash vault. So when COVID hit, a lot of my business owners were like, "I know you told us to build up this cash vault. We didn't understand why. Now it makes sense. Oh, we need cash flow," right? So one of the guys I was talking to, he's like, "I have 18 months of cash flow stashed away in my profit account." And when I say 18 months of cash flow, he means $0 coming in the door. He could pay all of his bills and expenses for 18 months. Like, he's sleeping at night through COVID, right? He's not freaking out and saying, "What do I do? How do I do this?" He's got the space to think, to pivot. And so this comes back. I'll tell you another story about Ed. Ed started his business this year. Actually, not Ed, Paul, sorry. Paul started his business this year, and he implemented profit first as a principle up front. So he's now 3 quarters into his business, and every quarter he takes a profit distribution. As a startup, he does this, right? Because profit is not an event, it's a habit. So let's start up front with the habit of taking profit, of removing it from our company, of not putting all our eggs in one basket, because you see what happened during COVID. If you've got your eggs in the wrong basket, you're in trouble. And so we need to build wealth outside of our company and make sure that we can survive these times.
All right. Great examples. So, why do you think we need to spend money to make money is the wrong message? We hear that all the time.
We do. I think what happens is business owners are told you have to spend money to make money. And who says that? Salespeople, right? Who's going to make money? If I came to you and I said, "Here's my message, don't spend money." Who's going to make money off of that message? Nobody,
Right.
right? And so we get into this wrong mindset of thinking we have to spend money to make money. But there are a ton of disruptors out there. And I've heard stories both from, and I'm talking in large corporate companies, where they figured out ways to partner. They figure out ways to get the customer to pay them up front. They figured out ways to do things differently instead of spending money in hopes of making money. And so I think when you just shift your mindset and you say, okay, I know if I'm given a resource, I'll blow it, Parkinson's Law. Well, what if I constrain myself and say, how do I do this? Or how do I make money without spending money? Then you start to look at your business differently. You start to go through your business. And if you go down, like I tell people, go through your bank balance for the last couple months. And for every single item, ask yourself, did this generate revenue for the company? Because if it didn't, it's vanity spending. Oh, we need a new truck, right? Why? Because my accountant told me it would give me a tax deduction and save me on taxes. This is the most absurd idea of spending a dollar to get 25 cents back. Like, why would you do that? And so you just have to shift your mindset and say, how do I do this without spending money? Let's get rid of all the vanity spending and let's actually be intentional with what we spend. And there's so many fees that we pay that we forget about. We sign up for software services, or we're with a vendor and they keep raising the price every year just because it's automatic. Have you ever stopped to say, hey, I'll sign the contract again if you keep prices even? Right? And we don't do that. We don't negotiate. And I think that's a big part of it, is being intentional with the money side of the business. Most business owners can cut 10% of expenses overnight if they actually put some effort into it, because we waste a lot of money because we're busy. We don't have time to think about it. And that's not good. So we need to keep doing that. The other thing is business owners need to look at their profitability and where their profitability comes from. So there's a paper that came out from Jonathan Burns. He's an MIT professor, and he examined large public corporations. And he found that in these big companies, 30 to 40% of their revenue was unprofitable. Yeah. Right? 20% was so profitable, it was covering for the 40%, and the rest was break even. Here's the problem. If you're the CEO of a company like this, and you go to Wall Street and say, hey, we're going to cut our revenue by 20% because it's unprofitable, Wall Street's going to punish you. Right? If you go to your employees go, I'm going to cut myself out because I'm unprofitable. That's never going to happen. And so there's all these drivers behind the scenes that lead to unprofitability. But you've got to go into your business and say, where is the profit really coming from, and how do I know? So like one of the guys that I was coaching, he has two businesses. His one business is a year-long business. It's a good business. He works hard. He makes a decent living. His other business is a seasonal business. It is so profitable, it's unbelievable. And I'm like, stop growing this business. Put all your efforts into your seasonal business, because literally you could work 3 months a year and make more money. Right? It's really hard for him to let go of his core business though. Right? Because that's what he does. Nor did he realize how much of a difference there was between what was coming in. And unless somebody sits down and looks at that, and every business has this same thing. I see this in all my businesses. They look at it, and there are certain things that are super profitable, and there are a bunch of things that are barely profitable. And if you change your focus and you shift to what the market's telling you, and you let go of your internal scripts, then you can be super profitable. But don't feel bad. 80% of business owners don't look at their financials. 15% of business owners look at them but don't understand them. There's only about 5% who get this right. And that's why so many businesses struggle and fail. And our goal is to end entrepreneurial poverty. Our goal is to help business owners be profitable and successful so they can go do what they love, support their families, and be able to pay their employees. This is not about paying your employees less or taking money against things. It's being able to do what's right, to make decisions based on your values, not your bank account, and to be able to live stress-free
Mm,
and sleep at night and have time to think about your business instead of always playing fire drill.
right. So, Rocky, what size businesses do you like to work with most?
I tend to work with businesses that are between 500,000 and 5 million. Usually what I find smaller businesses, some of them can afford services, some of them can't. They've got such tight margins, it's hard for them. So for them, what I recommend is read the book. If you've got a question, just email me. I'll answer your questions. I'll help you get started. And actually, we're creating a course for those smaller business owners so that they do have access to that kind of information. And then businesses that go above 5 and 10 million, usually they're at the size where they bring in a
Mm,
CFO, they put somebody in that seat, they have the ability to pay for great help. And so they should go do that. But in the in between, there's this big zone where there's a lot of people who need help and can't get good help. And that's why I want to focus on those people because they deserve the help and they need the help. And it's a really underserved market.
all right, I agree with you on that. So keep us posted on the course when that comes out, okay? And how can we get a copy of your Profit First book,
So this isn't my book, it's Mike's book,
right?
right? Whatever your favorite bookseller is, I am sure they have a copy of Profit First. You can just order it from whoever you love to do business with.
Okay. And how can people get in touch with you to do business with you, Rocky?
So I recommend people listen to my podcast, which is Profit Answer Man. And I actually go through each chapter of the book. I don't read the chapters. I give you the highlights of each chapter. So if you're not a reader, that's a great way to listen to the book and all the concepts in a short, easy to understand fashion. The website is profitcomesfirst.com. And my email is rocky@profitcomesfirst.com. Love to help you and support you so that you can throw and thrive as a business owner because they are the backbone of America. And right now, we need them more than ever to be able to survive and thrive so that we can get people back to work and surviving.
Absolutely true. Thank you so much for your great ideas, your thoughts, and giving us something to think about for our business finances. Hope to see you soon, Rocky.
Hope to see you soon too. Thank you so much for having me today.
Bet. Thank you for watching Business Notes. We've been speaking with Rocky Lalvani, a certified Profit First professional. I'm your host, Diane Bogino, bringing you business ideas you can bank on.